I
Sounds
am
great.
now.
Okay, Mike, thank you. Okay, guys, thank you very much. This is what I'm going to try to do today is I'm going to go over the selling and the different angles of how to approach businesses with our financing platform. Hopefully, you all see my the FlexBuy screen. I just put this up as a placeholder, but take a look at the new site when you have a chance. I'm particularly proud of some of these a couple creative videos I've done. I'm working on more because they're a lot of fun to do. So I'm going to do that. But let's get started. I want to start off by talking about the different kind of situations that you can be walking into. Okay, so I, I I've selected four common scenarios. Okay, one is businesses that currently offer no financing whatsoever. Another is businesses that offer only a traditional financing, maybe a GE or a Wells Fargo. Another is retail businesses that offer a progressive, and you're going to come across those a lot. When you get out there, furniture stores, appliances, and the fourth, which I put into a separate category, was medical practices that offer care credit. So I want to talk about each one of those scenarios and what the angle is, what the mindset is, and how you should be approaching each one of those businesses. And, some of this is product driven, but a lot of it is not. Some of it is just going in there with the right mindset of what the business is realizing right now, what's happening now and what should be happening if they had our products or had the right products for them. Okay, so the first scenario is a business currently has no financing whatsoever. So here's the angle and the way you should be looking at and what their reality is. 60% of consumers either have bad credit, no credit, or are maxed out on credit. Okay, so by not offering financing, a business is limiting themselves to the 40% that can use credit, that have credit card available for those significant purchases, and those individuals that pay with cash. And very few people have the ability to pay with major purchases with money that they have in the bank, because most people these days do not have money in the bank. So businesses that don't offer some degree of financing are really hamstringing themselves as far as reaching out to their prospective clientele. So here's what they can expect, and this is what your angle needs to be. By offering financing, and especially if they use it proactively, which means if they're advertising, mention it in advertising, and if they're not advertising and marketing, they should be out there, because this gives them a competitive advantage that they should be really, talking about. But at the very least, putting it in their window if they're a brick and mortar establishment. If they use it that way, and with the customer base that they're already getting, and depending on their demographic, 50% of the people, they will drive a lot more people to their business, and 50 to 70% of the people that they drive because of the financing should be able to get approved. Because if we set them up with the right financing program, the program that will appeal, have decent credit, and excellent credit, because there's some people that do have excellent credit, but do want a business that doesn't offer finance, they're going to go to a business that does offer it. So they may have excellent credit, they may have credit cards, but they may not want to leverage the credit cards for their purchase. They may want to use a separate line of credit or a separate loan to make that major purchase. So if they utilize the financing properly, they're going to drive a lot more people to their business, and out of those people, we can estimate that 50 to 70% of them are likely to be approved for financing. That's what we find for businesses that use us across the spectrum, not just for the bottom, but for top to bottom. So that's the bottom line. But the final angle, and which the real hook of this is, a customer that is offered financing can either be approved, can either be declined, or they can say no to financing. I mean, those are the three options. If there's no other way for them to pay and they're offering financing, those are the three things. But without the opportunity of financing, someone who doesn't have those 60% of consumers who have no other way of paying have no way of becoming a customer. So that's the thing that you have to drive into a business's head. We all get caught up in, I've had this question a lot. The biggest question that comes up in offering financing with any of our programs is how to overcome fee, the fee aspect. And, to a certain extent, I've alleviated a lot of that. I've made the barrier much lower as far as fees go. I think we're the most affordable business of our kind in this industry. Most of the other businesses that are selling products like this are charging a lot of money. They're not looking to build a volume business. They're looking to get their handful and just charge them a lot of money. We're not looking at that this way. We want to get as many people into our stable as possible. Good things can happen when you have clients, so you can sell them other things. Residual income happens. There's a lot of good reasons to build up a large portfolio. So we lower the barrier, but still fees do come up. But here's the thing: if you haven't overcome, and most of our fees now are in the form of minimum monthly payments. So those fees only come into account if the merchant doesn't use the program. If that is still a focus at the end of your conversation, you haven't gotten them past what you're seeing on the screen. Because once you've convinced a business that there's a bundle of people out there waiting to use financing, or that need financing, or that want to be their customers but just can't pay, if you get them to that mindset, the minimum usage fee should never come up. It should never be an issue, because they're never going to see it. Any business that uses these programs with any kind of regularity are not going to have monthly fees. It's all going to be absorbed into the loans themselves. So if you have a business and you can't overcome a fee, I'm afraid that you haven't gotten them to this point where they would actually believe what you have to say about the potential of the products. And if you haven't gotten them there, you're not going to make a sale. There's no way, because businesses don't want to use this and don't want to take this and put it on the shelf. If they don't believe that they're going to have a need for it, they're not going to take it. They're not going to pay money. They're not going to obligate themselves to any kind of additional learning process or any kind of product. So this is very important. You have to get them to this point. Otherwise, it's not going to happen, because if fees are still an issue, you still have work to do. Okay, so you haven't gotten to the close yet. The second scenario: businesses only offer traditional financing like GE and Wells Fargo. There's a lot of businesses out there that are like this. They sign up with one of these companies and they think their job is done. Okay, but here's the reality, and here's the angle that you have to go at them with. Traditional lenders like GE and Wells Fargo are only looking for credit scores of 700 or higher for the most part. But the average consumer in America has a credit score below 660. They're not appealing to the average person. They're looking for those people that have higher credit scores. And a lot of those people, guess what? Because they have higher credit scores, may not even need financing. They may have their own resources. They may have money in the bank. They may have credit cards. Those banks are typical banks. They want to lend money only to those people who don't need money. So, and that's the way it's always been. Businesses that don't need money have offers coming to them left and right. When you reach a point, and I've been in both places in my life. When I had a business that was, booming, I mean, I could have gone down. Our office space was over a bank. I could have gone down and signed for $100,000 without any questions asked. And I did a couple times. But once my business money, nobody was there. So, that's just typical. But and that's what GE and that's what Wells Fargo, do. They want those people that don't necessarily need them, but may take them because, So here's what it is. A business will realize a decline rate of 50% or higher if they're using those type of traditional lenders. And that doesn't account for the people who never try because they know that their credit will not match up, or maybe they've been turned down by them before. So the population of people that would like to do financing are not being captured if a business is only offering a GE and a Wells Fargo. with to understand, I'm going to go into our Credit Select Plus program in a moment because I really believe that's our core program now. Okay, so our Credit Select program will beat the terms in most cases provided by those traditional lenders on people with similar credit backgrounds. So if you put somebody with a 720 credit score into our system, they're going to get a better deal from us than they would get from GE and Wells Fargo. Okay, but here are the big differences. Our the way and I'm going to go more into it, but our Credit Select Plus program, the way it works is there's a core lender, which is considered the prime lender. So that's the first line of attack. After that, depending on what the merchant wants, we're going to have a waterfall of subprime lenders. So some businesses will say, you know what, I only want to have a discount of this as the worst case scenario on subprime. So they may end up with 2 additional lenders. In some verticals we may have with 5 or 7. We have now 21 lenders as part of our Credit Select Plus program. So what we'll do is we're going to set up a waterfall of multiple lenders for that merchant and try to patch up all the holes. So our prime program will accommodate people down to a 640 credit score. So unlike GE and Wells Fargo, to us the average consumer is a prime credit candidate. So right away, without going any further into the subprime category, we're going to accommodate a lot of people between that 640 and 700 range that are now being declined by GE and Wells Fargo. Plus, for those people that fall below to 600 to 550, we have lenders that will underwrite those loans and will actually approve people at those loans. So a business can expect approximately 50% additional approvals, and I think that's a modest number through our platform than they're currently getting if they're only offering GE and Wells Fargo. Okay, and here's the final hook. Only offers traditional financing and that individual is declined, that business has lost a customer. There's no place else for them to go because they don't have the money, they don't have credit cards, there's no place else for them to go. Through our platform, the customer has additional options. And just like in the first scenario, a customer can be approved, a customer can be declined, and a customer can say no. But if the answer is no and you have no place else to go, you lost the customer. Businesses owe it to themselves to give themselves as many options for the customer as possible. It's like if back in the day there wasn't, now it's common, almost every business, it's hard to find a business that wasn't always the case. It wasn't very long ago, maybe in the past 20 years, where businesses considered offering credit cards as a luxury. Now, as credit cards started taking hold, those businesses that held out lost out on clientele, lost out on customers, because there's certain people that only will use credit cards. They don't want to carry cash, and those businesses lost out. Now, if you're at that point where, like, here in Florida, I have a very unique situation. I come across businesses and I tell them I can help them increase their business by 40%, and they say, "You nuts? I don't want to work harder." It's the only place that I ever came across where retail businesses close at 2:00 in the afternoon. So, unlike other places in the country, and I've been in other places, New York, businesses will stay open until you kick them out. Here in Florida, they don't want to work harder. So in some cases, making this claim to businesses actually hurts me because they don't want to work harder. So, but anyway, most of the time, 90% of the time, that's not the case. Businesses are there to grow, and if they're not offering a broader range of ways people can pay, and that's what this really is. This is a different currency. This is just an additional currency. So you have cash, you have credit, and you have financing. So this is just an additional currency. If they're not offering every possible currency and trying to accommodate as many people as possible, they're leaving money on the table, and shame on them. Because if you're going to be in business, you might as well be in business as much as possible. Okay, so so this is the second angle, and once again, if you have to get these businesses, if you're talking to a business that has this financing, You have to get them to believe this. Now, I think, logically they know it, but, you're going to get for businesses that don't offer financing, you're going to get rebuttals like, nobody asks me for financing. I've heard that a number of times. And the answer is sure. Nobody asks, because those people aren't coming to you in the first place. People that need financing know they need financing. 70% of consumers that are making major purchases will research it online before they come in to a store, before they make that call to a business. And financing is a big part of it. And if they have a business who doesn't offer financing, they're never going to make that phone call. They're never going to take that trip to that store. Why should they? They know they need, that $3,000 widget, and they don't have $3,000, or somebody's not going to lend them money to buy it. They have no chance. Why even go through the motions? So they're going to go to a competitor that does offer financing. So you have to get them to the point where they believe if they have financing and they're only offering a traditional financing, they're leaving people on the table, because a lot of people don't fall into the category that would qualify them for that kind of financing. Okay, so it's very important. So those are the first two categories. Okay, you have businesses that don't offer financing, and that's a large number that are out there. Those that offer traditional financing only, and that you're going to find mostly in the retail space, and some of the larger auto repair shops, but it's not commonplace. Some of the home service businesses offer it. And the third category, and I'm putting this as a separate category because this has come up just recently, and we happen to have a great hole filler in this case. For years, the staple in the retail sector, whether it's furniture, whether it's mattresses, whether it's appliances, whether it's electronics, whatever the retail business is, Progressive has been very aggressive in getting out there and becoming a staple in that marketplace. Now, you've heard me talk about Progressive in the past. It's not a customer-friendly program from the standpoint of terms, particularly if that customer plays it out for 12 months. It's very expensive, but it serves a purpose, okay? And let's always keep in mind customer behavior. Customers, when it comes to financing, do not make a decision based on what the final cost is of that financing. They make a decision of what it means to their budget. So if they're buying $1,000, something for $1,000, and through Progressive, it's ultimately going to cost them $1,800 if it goes 12 months. They're not thinking about the $1,800. They're thinking about the $150 a month that it's going to cost, and do they have that money in their budget to handle $150 a month? Nothing else matters. So the only people that ever bring up the final cost of financing is businesses and us. To the customer, almost all the time, it never matters. If think about the last time you purchased a car and you did financing or you did a lease. Did you ever think? Did you take out your calculator and say, "What is this going to cost me for this car?" It's probably too painful to even think about it. You didn't even want to go there. All you knew is that $300 a month payment was going to fit within your budget. So Progressive, and believe me, when I didn't have a product to offset Progressive, I did what every salesperson did. I sold against Progressive in those kind of programs, because in an ideal world, I wouldn't offer that kind of program. It's very expensive, but it has a purpose out there. And here's what I've been finding lately when I'm approaching or speaking to businesses, retail businesses that offer a Progressive. For those of you who don't know, I have some new people on the call. Progressive is a lease to buy program. So the way it works is you're leasing an item, whether it's a mattress, some furniture, electronics, a computer, whatever it is, but you get a window to pay it off without penalty in most cases. If it goes beyond 90 days, which is the case of Progressive, in the case of the program that we have as part of our portfolio, it becomes a lease. It becomes a 12-month lease. So for 90 days, if somebody really has the wherewithal to pay it off in 90 days, which unfortunately most people do not, it's an excellent program. The costs are very, very low, But if it goes beyond the 90 days, it becomes more expensive. It's a lease, and that's why these programs could only be used on tangible items. It can't be used for services. It can't be used on something that's titled, or a product that's titled. So it's limited to a retail audience. But Progressive has been a staple. But here's what I've been finding, and speaking to businesses lately. Progressive, two things have been happening. One, Progressive has been under approving a lot of customers. So if somebody's going in and trying to get $2,000, they're going to approve $1,000, and they've been doing it with a high degree of regularity. The other thing I've heard just recently is from a couple of businesses that Progressive has been slow to pay their business. So that's the other thing. Businesses can kind of if it's depending on the percentage, they can kind of ignore a little bit. If you're slow to pay them, that they'll notice. So I've been hearing that a lot. So here's the opening. The opening is we have a program that competes very favorably with a Progressive. And just to give you a rundown, you could finance up to $5,000 with our program. $40 is required at the time of the sale. That's the cost to the consumer. That's a payment made to the business. The business, there's two versions of our program. One has a 6% discount to the business, and one has a 0. I'm going to refer to the version that has a 6% discount because these businesses really don't care. They'd rather have the 6% discount because with the 6% discount comes the opportunity to pay it off same as cash within 90 days. So if somebody is buying a $1,000 product, they're going to pay $40. If they pay it off within 90 days, they only have to pay $1,000 to pay it off. So that's all it would have cost them for 90-day financing if they pay it off, within 90 days. If the payment's $150 a month, if it goes beyond 90 days and it goes to 12 months, they'd pay $1,800 on that $1,000 purchase. If they pay it off early, they get a 35% discount over the balance. So there is a discount, but if it goes beyond 90 days, it becomes much more expensive. So our program is living this out. It's proving this. They will approve between 70 and 90% of applications. 70% will be approved without any documentation. It will be an instant approval. Nothing else is needed. It's an instant approval. Another 20% will be approved subject to, they may want to see a pay stub. They may want to see some other documentations. Progressive asks for docs. So that's another advantage of our program over a Progressive. So yesterday I signed up a furniture store. It's a small furniture store, and you'll be surprised of how much business these businesses do. This furniture store only does financing. They offer Wells Fargo and they offer Progressive, and most of their businesses are Progressive. So, the way they market is they don't want to compete against the bigger stores, the higher end. So they're at a middle to lower end spectrum. So almost 100% of their business is financing. They submit right now 60 applications a month to Progressive. I'm switching them over to our program because Progressive has disappointed them. So we're going to get a crack at 60 applications a month coming through our program. And this is not uncommon. This is a small store. I mean, there are bigger stores out there that are doing hundreds of applications a month. So there's an opportunity here on these retail businesses. So, the point is, if you see a business out there and they're already offering, if you're driving by and you see that sign in the window, don't assume that they don't want to do business with you because they may be happy to see you. So, that's an angle. The second angle is, if a business is not offering any other kind of financing, or even if they're offering traditional financing like a Wells Fargo, we can bundle it up and offer them the Credit Select platform, because people with better credits are not, for those stores that appeal to maybe a upper middle class clientele, or they still may want financing, but they don't want those kind of terms that a Progressive may offer. So you can still sell them on a credit-based platform because they want to be rewarded with better terms, longer terms. So it makes a great 1-2 punch. Most businesses that are in retail, the Progressive or the no credit check lease to buy program is the star. because that's the one that makes it easy. That's the easy online application, no hassle. They usually can get people, and here's the crux of it, and it's the unfortunate thing. Almost 100% of people that sign up for these programs believe that they're going to pay back the amount that they owe within the 90 days, and so they're never going to incur those other costs. The unfortunate thing is only about 10% of the people will actually do it. The rest of them will just live it out, and they're going to pay the higher costs. But that's just the way it goes. But the thing with these kind of programs is it does give the consumer an excellent platform to go in there, get easy financing, and have the ability to pay it off in 90 days without incurring those large costs. And you're not going to find a more even cost-friendly product if it's paid off within 90 days. It's only costing them $40 for the luxury of that 90-day financing. So this is the third scenario that I think is very, very important. And so don't ignore it. If you're out, there's a lot of retail businesses, and a lot of them already have a Progressive. Don't ignore them. They may need your services, and chances are they do need your services. So, that's another angle. The fourth scenario is, and I put this into a separate category because it's such a very large category. Medical practices that currently utilize CareCredit. Now, if you want, go to the CareCredit.com website. I suggest you do it. CareCredit, it's really great for us. They make every business, every medical practice that's on their platform, they make it available to the public. So the way it works is if somebody needs financing, they will go to CareCredit first. They'll pull up the list of doctors that the kind of doctor that they're looking for, a veterinarian or whatever it is, so they can see a list of who offers CareCredit. The vast majority of medical practices offer CareCredit, and I have no idea what the percentage is. If I had to estimate, I'd say 70 to 80% of medical practices offer CareCredit. Here's the crux of CareCredit. And CareCredit, I guess, has served the purpose, but as times have changed over the last 7-8 years, CareCredit has not in what they're looking for. Once again, same type of thing. CareCredit is looking for scores of 700 or higher. Okay. Once again, the average consumer in America has a credit score below 660. Practices of what they know of get 50 to 65% declines. Ask a dentist; they'll tell you that. They'll probably tell you that number. But that only accounts for the people that they know about, because very few of them go into the back office to see what's actually going on. Because here's what typically happens when a patient comes in. They say, "I need financing." The person at the desk hands them a brochure. They go home. They complete the application at home. They get declined, and they never see that person again. Because why bother coming in? They don't have the money to have their teeth fixed. So, they got turned down by CareCredit. There's also a whole other category of people who never go for treatment because they've been turned down by CareCredit before and know they can't get approved, by them again. So why even bother? So there's a lot of people sitting on the sidelines, not getting treatment or not getting the care they need for themselves or their pet or their children, whatever, because they can't get approved by CareCredit, or they perceive that they can't get approved by CareCredit. Okay. Also, CareCredit is notorious for under-approving. So if you're asking for $3,000 and according to them your income only justifies $1,500, they're only going to give you $1,500, and you have to scrape up the rest. So there's a lot of and that doesn't even account for the declines. That's an approval, but that's an under-approval. So that doesn't, so there's a lot of holes to be filled with medical practices that offer CareCredit. As always, in medical practices, the biggest challenge is getting to speak to someone that will actually be in a position to, make a decision, or getting their attention, or actually care. Because, a lot of times these medical practices are very, very busy as it is. So when you're speaking to the person who's maybe the finance manager or the person at the front desk, they're thinking to themselves, why should I bother? I'm already busy. Do I really care if we get new patients? The only one who really may care is the dentist or the doctor, and unfortunately, they're not always involved in the business aspect of their business. So that's always the big challenge. But before you even get to them, when you do get to them, you have to know what angle to pursue, and this is the angle. Okay, so our Credit Select Plus program, as before, will beat the terms provided on Care Credit on people with similar background. Plus, we'll approve people down to 640 for prime, and also we can offer subprime. Let me show you something. I hope you can see this. This is a little light. This is actually a Care Credit bill from somebody I know. So I believe this. I'm not putting spin on this, okay? This is somebody that gave me their Care Credit bill. They have a 720 FICO score. So they were approved by Care Credit. Here's what they got with the 720 FICO score. I don't know if you could see it. I'm trying to make it bigger so you can. Okay. They got an APR of 26.99, and that's with a 720 FICO score. Okay, 26.99%. If they pay the minimum payments, and what is the amount here? Let's take a look. The amount is
the total is $13,000.
$3,940 is the full balance. Okay, if they pay the minimum amount, it will take them 18 years to pay it off, and they'll pay a total of $13,036 over that 18 years. You think about that. So, think about what Progressive is costing people. I think this is higher. I'm pretty sure it's higher. So, 18 years, you're going to pay almost $10,000 of interest, or $9,000 of interest for this Care Credit loan. Plus, you're paying a 26.99% APR. I guarantee you, if you put someone through our program with a 720 FICO score, and the income that because I know this person and they make good income, they're going to get better than a 26.99 APR. I guarantee it. I guarantee it. Yeah.
I use Care Credit, and it's zero interest, but they give you like anywhere from 6 months to 2 years, depending on the amount you use.
Right. And this person went beyond because just like everybody else, he thought he was going to pay it off within that 6-month period of time, and he did not. So he went beyond that. And what they do is, for Care Credit, by the way, and this is true with all these promotions. It's very important for you to know. It's not interest-free for 6 months or interest-free for 12 months. It's a window. So if you pay it off during that window, you don't pay interest. But if you go beyond that window, they go and tack on the interest back to day one.
Right, I understand that.
So here's the typical cost. The typical cost to a business to offer 0% for 12 months is about 9% discount with GE. So that business is going to take a 9% haircut to offer that 12-month, 0% interest promotion, knowing that a very small percentage of it's going to hook people, but a very small percentage of the people are actually going to pay it off in that 6-month or that 12-month promotional period. We can offer those too, by the way. We can offer those, those kind of promotions, but we're going to offer better APRs than 26.99 for somebody with a 720 FICO score. I can guarantee it. So, keep this in mind. This is what people are putting up with, and I forgot what the number is. A few months ago, Care Credit was fined multiple millions of dollars by the federal government for fraud. What's that?
It was $34 million.
$34 million they were fined. And so this is the new and improved Care Credit. So they're disclosing everything now. There's no secrets, but you know what? It's kind of ugly. So they were better off when they were not flashing it in your face. So, listen, some people, even with our program, will end up with possibly 26.99%. But those people are probably going to have 550 FICO scores, not 720 FICO scores. The rate people pay should be proportionate with the risk. If somebody with a 720 FICO score is not worthy of a better risk assessment than this, then something is wrong in this country. Then the credit scoring system shouldn't apply. You should just throw it up in the air and decide what you're going to offer someone. Because you know what? If you're not going to use 720 FICO score and consider that a lower risk, then it doesn't make, none of this makes any sense. So yeah, I'm not saying no one should ever pay 26.99% APR, because some people pay that on credit cards. Some people, when they do loans, even through us, are going to pay that. But the difference is that hopefully the offer will be proportionate to what the risk is. So, and this is Care Credit. So this is GE. This is the biggest guy in town. This is what the biggest guy in town is offering. So, you know, the point is that there is a hole here. I mean, you know, there is an opportunity. And that's for a prime customer. Now, GE Care Credit, if somebody has a 650 or 660 credit score, which is the average consumer, they're not going to be given any offer at all. With our program, assuming all of the things line up, they'll be still considered prime credit with us, which is great for the business and great for the consumer. And if they fall even below that, if they fall down to as low as 500, we can still offer them something if that's what the business will actually accept. So the way our Credit Select Plus program works, just to, you know, I'm going to go over it a little bit more in a couple of minutes, is our core program has a very, very low cost basis. So for the business, from a discount standpoint, from the consumer, when you get into the subprime areas, it comes with discounts. Every business has discounts. GE Care Credit, their discounts can be anywhere from 6% to 15%. Okay, so everybody has discounts. People with very low credit scores, you know, somebody has a 500 credit score, we have lenders that will actually approve someone with a 500 credit score, but that discount is going to be 45% or something in that neighborhood. Now, many businesses, as a matter of fact, most businesses can't absorb a 45% discount. So those of you that are new, what a discount means is if there's a $1,000 loan, the business would only be getting $550. The rest of it is taken off the business side as part of the risk. So most businesses can absorb a a 45% discount. So what we do with our platform is we let the business pick out what number they can absolutely absorb. So if they can only absorb 25% of a discount, we're not going to offer their customers loans where the discount is 30, 35, 40%. So we let the business decide what their threshold is, which is very, very important, because what we're trying to do is, one of the good things, and so Care Credit is not all bad from a business standpoint. One of the good things that they've done is that once the consumer applies for a loan, the merchant is essentially out of it. The merchant deals with you know, GE, so the lender doesn't have to. I mean, the merchant doesn't have to get involved in the negotiating and telling the bad news and all that kind of thing. We're trying to do the same thing with our platform. So once that application goes in and we know the ground rules, we know what the merchant will accept, won't accept, we'll deal directly with our processors, will deal directly with the consumer to keep the merchant out of that loop. So the merchant will tell us ahead of time what their ground rules are, what they can absorb, what they can't absorb. Okay? So if a medical practice only offers Care Credit, and once again, if that individual is declined, they lost the patient. There's no other way, unless they're going to go borrow money from a relative or whatever, which is always an option. Through our platform, we have a lot of different options for patients. Okay, so we can help those. We can make an offer. At the end of the day, if it's a subprime offer, the consumer may say no. It happens. But if they only offer Care Credit, they can never be in a position where the patient has a choice. So that's what we're always fighting for. We're trying to give customers, patients, clients a choice. Okay? Without finance, if we offer something, let it be their decision as to whether they go forward or not. If they don't offer, if a business doesn't offer it, there's no way they can go forward. So it's something we're giving people choices. They can say no, they can say yes, they can do whatever they want. But it's all about options, and that's what our financing programs do. It's the same thing as every other currency. Those of you in the credit card business, if you were selling this when Ali Razi started this, back in the 80s, probably early 90s, that was his sales pitch. His sales pitch was, give your customers the choice. They're carrying this plastic in their pocket. They may choose to use it. If you don't offer credit cards, and that was the selling pitch to businesses back in the day. Offer credit cards or don't offer credit cards. It wasn't let us get you the lowest rate possible. It was about convincing them that they should go through the discount, the 3% cost associated with credit cards, or leasing the equipment back then, or buying the equipment. So it was about convincing them that they absolutely needed credit cards to advance their business. Now today it's common practice. Every business acknowledges that unless they offer credit cards, they're operating with both hands tied behind their back. But we're at that stage now. So 10 years down the road, offering financing is not going to be optional. It's going to be what financing program. So, it's going to be like credit cards are today. Everybody's going to be bidding to get the best financing program into the business. Right now, you're at the education stage. So you have no other choice but to educate these merchants and persuade them, show them the facts, show them what they're missing out on, and getting them to live it. So they come to that same conclusion. It's like that movie. What was that movie? Where anyway, it has to become their idea at the end. At the end, they have to say to themselves, "This person's not convincing me. I need this. It's my idea. Hey, this is a great idea. I should offer financing." So that's where you have to get. That's where you have to get your clients to, or your prospective clients to. So if you don't get them there, nothing else really matters, because people are only going to make this kind of move, even if you offer it for free. Even if you offer it absolutely for free, people don't like to change things unless they have to change things. So if you offer something for free, they don't want they don't want to change things. They don't want to go through the learning curve. It's a pain in the neck. They're busy, blah blah blah. Unless you get them to the point where they're convinced that this is going to take their business to the next level, and that's really what we're about. Then it becomes easy. I have all kinds of. I got businesses that call me up and they've decided they need financing. It's just a matter of who they're going to land with. I love that, because once I get them to that point, I know I can land it. But it's the ones that have to be convinced that you have to get them to that point. You have to do the persuasion thing.
Bob, was it Glenn Ross you were trying to think of?
No, it was the movie with oh my God. I had a migraine this morning, so my brain's not working nearly as sharp. Plus, I watched the final episode of Wilfred last night, and I barely slept last night afterwards trying to figure it out. Inception? Inception? Was that it?
Oh yeah, okay.
Yeah, okay. So it was Inception, where they would go inside someone's brain and make them think it was their idea. So
okay. Can I ask a question?
Yes.
Okay. When approaching people with CareCredit, well, let me say something about the other three that you did, or 3 or 4 before this.
Mm-hmm.
They're absolutely wonderful, and not only in the selling part, in the telemarketing part. This is almost a script you've put together. It's wonderful. However, with CareCredit, I don't feel like I've gained 1 inch.
Okay.
And the reason being is, like you said, it's the educational part. They have a system set up where they hear zero financing, they end up paying 27 to 30%, because they always have goals and dreams to get that thing paid off. I have goals and dreams. Mine was, 14, 15 grand. And so far, I've been fortunate enough to avoid the percentage. But I know if I screw up one little time, I'm in big trouble. But is there any way we can offer something that actually copies or mimics exactly what they're offering, without the penalty jumping to 27%, jumping to a number that is befitting their original score?
Well, CareCredit doesn't, so why should we? But the answer is, in our, like I said, we have 21 lenders that are part of our platform. We do have a couple of them that we can build in those kind of promotional offers to practices where they want to promote.
I think you can get something that mimics exactly. It works, Mr. Consumer. It works exactly like Care Credit. However, instead of screwing them on the back end at 27%, most of them will go to 14%. Something to that effect.
Yeah, I mean, there's usually no free lunch. There's usually no free lunch. I mean, we can look into that, but Mike, I think that it's, I think that you're building more into this than has to be. Okay, so I can understand.
I've never got off the ground credit.
Yeah. I can understand a medical practice or any kind of business thinking to themselves that they have to offer a promotion, that they have to come out there and offer a 0% for 6 months or whatever that is. People fall into two categories. They fall into, I want that promotion because I'm going to pay it off in 6 months, or I know I can't pay this off in 6 months, so why, it doesn't matter that much. Now, a lot of people believe they can pay it off in 6 months. So as long as you offer that promotion, what happens after the 6 months doesn't really matter that much to them, because they know in their heart that they're going to pay this off in 6 months. So the thing that we can convince businesses of, or medical practice, the better scenario for them, because it costs them a lot of money to offer those promotions. I mean, 9% discount is 6 to 9% discount is steep. That's a heavy price to pay to offer that kind of promotion. Maybe they make them that offer as well, but they also on the other side say, all right, here's choices. You could pay 0% for 6 months and then it becomes X, or we can give you a loan for 12.95%. Installment loan for 12.95%. But even assuming you haven't overcome the GE thing, the Care Credit thing, you still can overcome the fact that the majority of people can't qualify for it.
Yes, you're right.
So for those people that can't, so let's say you haven't convinced a medical practice, and chances are you're not going to. I mean, they've been using Care Credit for 10 years. Chances are they're not going to just because you say so, abandon Care Credit and start using you. But you know what? So what? Use us as the second look. So go to the patient instead of just handing them the Care Credit brochure. Say, all right, here's what you do. We have Care Credit. Try this first. If this doesn't work, we have this program. I'm okay with that, because I think we're going to get more business than Care Credit if they do that. We're going to get more business, and plus, businesses that advertise and promote themselves, and there are some. If you look through your local papers, a lot of dentists still do, because dentists are always looking for business. If they advertise the fact that they have flexible credit beyond Care Credit, they're going to get people coming to them, because there's a lot of people out there that have been either turned down by Care Credit. Already maxed out on Care Credit. Maybe they already have an outstanding Care Credit loan and can't get another one because that's all they can get. So, there's two angles. I'm not saying you have to go in there and try to beat the pants off of Care Credit. I think we can over time, but let's get us in there as the second choice, and then we'll show them over time that they should be using us for everything. Have I convinced you?
Nope, but you're closer.
Okay.
You're close.
I mean, it's okay. You have to convince yourself. You have to do. You can't sell it if you're not convinced. You have to believe it.
It's a better deal, but it's hard to get those stars out of people's eyes.
So don't even try to. If that's what you're struggling with, don't even try to. Come into them and say, listen, keep what you got, but here's the facts. 65% of people that want to use Care Credit can't, or will be turned down by it. How about offering us to those people?
Well, then now what's that monthly minimum I got to pay?
The monthly minimum is, you could choose it. It's $199.
Well, I don't think
if you haven't overcome them, but if they're using, but then the answer is this. All right, how many Care Credit applications are you doing each month, Dr. Jones? I'm doing, I think there's about 30 people. Well, you know what? Then there's probably another 40 people that will be applying for our program because Care Credit is only approving at best 50% of your applicants. Plus, there's a lot of people out there who don't even try because they know they can't get Care Credit. So you don't have to worry about this minimum usage fee because out of these 45 applications or 40 applications that you're going to submit through our program, you're going to by far pay more than cover that minimum usage fee. So it's not going to matter. The minimum usage fee only for all of our programs. The minimum usage fee only matters. The monthly minimum usage fee only matters if they don't do financing. If they're not going to do financing, if they believe that there's a chance they're not doing financing, you might as well leave. You're not going to make that sale.
Oh, I agree 100%.
So same thing holds true here. Same thing holds true here. So whatever number they're using for Care Credit, you can use that same number or higher and say those are the people that are going to be using our program. Now, not all of them are going to be approved. If you use us just for the rejects, we're probably only going to approve between 50 and 50% of those rejects. But right now, how many out of those rejects, how many of those patients are you getting now? 0. Guess what? You're going to get 30 to 50% of those patients, those people as patients now, while you're getting 0 on them, prior to this.
His first 3 are fabulous. Your first 3 are fabulous. This one here, I need to get my brain better, I guess. What I got here is failure to communicate.
Okay.
I'm
open to your. I'm open to your.
The only suggestion I have is one. Is getting a program, and I'm sorry, I don't mean to take up everybody's time, but the only suggestion I have is for you and your wonderful wisdom to build a copycat program for whatever situation it is Care Credit, and if we move it. Instead of giving, the people that are approved at 720, instead of them falling to a 27, they'll fall to a 12. And the people that get approved at 660, instead of falling to a 12, they'll fall to an 18. And so however we describe it to the people, say, well, we've made much more discriminatory for our people rather than just a blanket 27% for anybody that got approved and know that it takes 700 higher to get approved. That's my only suggestion, however poorly I said it.
No, I understand what you're saying. I just my only thing is it's and believe me, we'll always look. I mean, we have 21 lenders. If we could find 30, we will. But my priority is not always to if you're looking at a population, okay, and the bigger part of the population is not being served. I'd rather address the bigger part of the population. I mean, if I could, I would address the 100% of the population. But
yeah.
If I can get the 50 or 60% of the population, that's not being served, I probably do that too. So yes, in an ideal world, I'd love to come up with a 0% for 12 months, then 9.95% for the rest of your life. But if I can't do that, I'm not. Why? That's not the angle to take. So if the angle to take is we have this product, and we have a product that will accommodate a lot more people because of all the declines that are happening, all the people that are being turned off because they can't do that financing. So we'll go to much lower credit scores, accommodate a lot more people. So yeah, I mean, you know what? You have to wrap your head around because you have to wrap your head around what we have, or just don't sell it because
Bob, your first 3 I love. I mean, absolutely, You opened up my mind wonderfully on those first 3. I really, really like everything you did. And I just maybe I'm just slower.
But this fourth one is this fourth one is no different than the other. It's just you have more experience on the medical side, and the medical side is not easy. The medical side is not. Yeah, because it's not an easy category, but it's not easy as much because of product. It's not easy because of trying to get people to talk to. I mean, that's the hardest part in the medical side, trying to get someone's attention.
Well, I don't want to belabor the point, and you've approached as good as I feel that we can. Now let's go on to the next step. For my account.
Well, I'm gonna. Anybody else have any questions on this before I move on? I don't want to spend a lot more time because I try to limit these calls to an hour, and I'm ready. way. So, anybody else have any questions on this before I move on to something else?
Hey, Bob.
Yes.
Hey, quick question. I noticed when you were just talking to him just a moment ago, you mentioned that if they did a loan, that 199 or 299 or 399 did not apply. I thought that was only on SPF.
Nope. We've set up all of our if you look at all of our programs now, just about I think all of our programs have a monthly fee or whatever portion of the discount, whichever is higher. So they're going to be charged X amount on each loan. If those fees exceed the monthly, then they don't pay the monthly.
I got you.
So the reason I did that is, and that's something I did because I want you to be able to overcome those monthly fees, because they're not a monthly fee. It's a monthly minimum fee. The way to look at those monthly fees is there's a cost for us to sustain this platform, for us to service this platform, to have people there to service you. If you don't use it, we still have to man ourselves. We still have to be ready to handle your volume that you said you would do. So if you don't use that platform, it costs us money. So we want to make sure that you're going to pay your portion in the event you don't use that platform. But guess what? That's not going to happen. Right, John? You're going to be able to. There's no way you couldn't come up with 5 to 10 customers a month that are going to. If you come up with 3, it pays for it. So you're not going to have a monthly fee. It's all going to be absorbed into your financing. So you don't have to worry about it. That's what I want the conversation to be. I don't want us to be focused on fees. I want to be focused on usage. Because if they don't use it, and once again, another thing I've done is there's no long-term contracts with any of our programs, and there's no cancellation fee. I like them to give us 90 days. I think that's the minimum time it really takes for us to massage it and make sure that we got it optimally working for them. But beyond that, they don't have to stay with it. They could drop out at any time. So we have to build a platform that's going to work for them, because otherwise we're going to lose them as a client. So we're in the same boat as them. We want them to use the program. And if they use the program, they don't have the fees. And if they do have the fees, and they have the fees month after month, guess what? It's probably not going to be a third month. So that's what I want. I want the conversation to be. I want the conversation to be about usage, about getting them to live this, getting them to visualize how they're going to use this to their benefit.
Bob?
Yes.
Could you possibly put together like a one-page highlight sheet, with bullets to talk about the first 3 options?
I'm going to make this available in the back. I'm going to make this exact thing available in the back office.
I'm talking about like an overview, like a one-page highlight, the bullets.
Yeah, I can work on that. I'm in the process of now. We're going to be putting flyers and marketing materials. I'm a little bit light in that area now, so I'll be working on it. But that's something that's a good idea. I'll put together a one-page a one-page handout on this. But I don't know if I could do it on. It's going to be hard to. I'll do my best to compress it into one page.
Or it could be 2 pages. I could do a front and back and laminate it so we walk around. It's good to have something to do, and then it's not.
Okay. Yep. That's not a problem. Yep. I think this is the important stuff, guys. This is the stuff that I know a lot of you focus on. And a lot to learn here. We have a lot. Even though I've condensed, I have a few programs, so there's a lot to learn. But you shouldn't focus shouldn't focus on the knowledge, focus on the angle. Because here's the approach I would take, and this is the approach I've always taken. And sometimes I got to bite my lip because, I've had a number of years head start on many of you guys as far as knowing these programs. So when I speak to a business, I know within 30 seconds what I'm going to offer them. But I don't come across that way. What I'm trying to do in my first conversation with a business is always about them. I want to learn about their business. I want them to tell me what they need, and or I got to get them there. So I got to talk about they're missing out on, what their gaps are. Because I'm not going to offer them anything in the first conversation. I'm not going to talk about any products at all in the first conversation. Maybe generally, what we have, a credit-based program, whatever. But I'm not going to give them any specifics in the first conversation. So my first conversation is always about these things. It's always about, okay, where are they now, and where am I going to take them? Because then I'm going to come back to them, whether it's the next day or whatever. Usually it's the next day, and I'm going to say, you know what? Here's what I came up with. We have these programs, but based on our conversation, this is what I think will fill you this is what I think will fill your gaps the best, and I come up with a proposal for them. And that's what you guys have to do, because if you do that and you work with me on these proposals, you don't have to be an expert on the products. Just learn the angles, and then I'll come back and I'll give you, based on my opinion, and we can discuss it, and I'll talk you through it, but I'll give you the products that I think would best fit. That can be your cheat sheet. I'll go over with you. Now you'll know the products, and then you can make your presentation. So, don't be intimidated by product knowledge as much as, knowing what businesses need. You're not the guy or the gal who's going to, open up the suitcase and, look at all my watches. And this is not that kind of thing. This is much more abstract. So you have to get these people to really visualize themselves needing this and wanting this and really excited about it, because it really is. It's really, if you think about it, this is not a utility. It's not like credit cards are today, where unless you have it, blah, blah. This is something where a business has a competitive edge, really, still, if they offer financing, any kind of financing. If they offer this kind of financing that we provide, they really have a competitive advantage. It's really something that they can talk about. It's really something that they can feel good about, because it's going to take them to another level, especially if they use it the right way. The biggest mistake businesses make is they think they've done something by signing up for a program like this. You know what? That's only the first step of 4 or 5 steps, because unless you're going to go out there and, proactively promote it and, talk about it and tell people about it and, let the community know, it's only going to perform marginally. You have to buy into the whole thing to get the most out of it. Now, in the back office, I don't have a lot of time. I'm just going to point out some stuff. A lot of time on this. I think this was good. Again, this is in the back office. This is something I prepared, and I suggest you go through it. It's a logic flow chart. Okay, so this helps you as far as your decision chain if you need to talk about products, or you need to know what products are most useful in most cases for most of these business types. So down here. Hopefully you can see. I'm going to click this again. So down here you have a product chart. These are the 4 different products we offer. These are the business types. It brings you down the path. Is the customer a business, or is the customer a consumer? And it brings you down a path as far as which products are most suitable. So just go through. I think it's a pretty useful. I think it's a pretty useful sheet, and it works as a great cheat sheet for you. So this is the logic flow chart that's in the back office. Go through this. I was going to go through the Credit Select Plus merchant application package. I'm going to save that for another time. I'm going to go deep into Credit Select Plus next week. We have a lot of information back there, but I'll go through it. This is what the application package looks like. Let's see. So, it's pretty self-explanatory. And Terry, you had asked the question earlier. Let me show you the wording of the.
Do you hear that tone, Bob?
Yeah, I do hear that. I'm trying to ignore it. It's not me. It says, I authorize FlexBuy to debit from my account the equivalent of 2% of each funded loan or the monthly minimum fee as indicated on Schedule A of this agreement, whichever is greater. So the 2% come, and then if they reach that 195 or 240, 199, 249, or 299 per month, whichever you pick, they don't have to pay that monthly. So it's a monthly minimum usage fee. So anyway, I've used up a lot of time. I'll have another at least one training session next week on Credit Select Plus for sure. Maybe I'll try to fit in two. Any questions before I end this? No questions, guys? Well, I hope this was useful to you. Recording this, so if you want to listen to it again or watch it again, you certainly can. These programs are great. You just have to get out there and start talking to businesses. There's no shortcuts. You have to go through that, go through the logic and get that business to really, buy into what they really need, which is a program like this. So if there's no other questions, I'm gonna let you guys go. I'm always available.
Bob,
yeah. Yes.
When you work on the market, which if you could come up with